20 years ago, the most significant element of executive settlement was cash, in the form of salaries as well as incentives. Stock options were just a footnote. Now the opposite is true. With amazing rate, stock choice gives have actually concerned control the pay, as well as often the wealth, of top executives throughout the United States. Last year, Jack Welch's unexercised GE options were valued at more than $260 million. Intel Chief Executive Officer Craig Barrett's deserved greater than $100 million. Michael Eisner worked out 22 million options on Disney stock in 1998 alone, netting more than $500 million. In overall, United States executives hold unexercised options worth tens of billions of bucks. It would be challenging to overemphasize how much the option surge has altered corporate America. However, has the change been right or for the even worse? Definitely, choice gives have boosted the ton of money of numerous specific execs, entrepreneurs, software program engineers, and financiers. Their long-term effect on service generally remains much less clear, however. Also, a few of the people who have made money most from the fad reveal a deep discomfort regarding their company's growing reliance on options. Do we actually know what we're doing? They ask. Are the incentives we're producing in accordance with our business objectives? What's going to happen when the booming market finishes? Alternative gives are much more controversial for numerous outside observers. The gives appear to bath ever before better treasures ahead executives, with little connection to business efficiency. They show up to use fantastic upside incentives with little disadvantage threat. And also, according to some very singing doubters, they motivate corporate leaders to seek short-term actions that offer prompt increases to supply values instead of construct companies that will certainly thrive over the long term. As using supply choices has begun to expand worldwide, such worries have actually spread out from the USA to business centers of Europe and also Asia. I have been studying using alternative grants for a number of years now, modeling exactly how their values change under different conditions, evaluating how they communicate with other forms of payment, as well as taking a look at just how the various programs sustain or undermine firms' organization goals. What I've located is that the doubters of choices are mistaken. Choices do not promote an egocentric, near-term viewpoint on the part of businessmen. Fairly the contrary. Options are the very best settlement mechanism we have for obtaining managers to act in manner-ins which make certain the long-term success of their companies and the wellness of their workers and investors. But I have actually likewise discovered that the general nervousness about alternatives is well required. Stock options are bafflingly complex economic instruments. See the sidebar, a short program on options, as well as their assessment. They tend to be inadequately recognized by both those that give them and also those who obtain them. Therefore, firms commonly end up having alternative programs that are counterproductive. I have, for instance, seen many Silicon Valley firms continue to utilize their pre-IPO programs, with unfavorable repercussions, after the companies have grown and also gone public. As well as have seen several big, drowsy firms utilize alternative programs that unintentionally produce weak motivations for innovation and also value production. The lesson is clear. It's not nearly enough just to have a choice program. You need to have the best program. A short program on options and their valuation. Exec stock alternatives are phone call options. They offer the holder the right, however not the responsibility, to buy a. Prior to discussing the strengths as well as weak points of different types of programs, I would love to step back and also take a look at why alternative grants are, as a whole, an amazingly powerful type of settlement. The pay-to-performance link.